Hi, welcome to our next edition of Highlights, our exclusive bonus for those who are members of the candlecharts.com family. And what we're going to be looking at today is momentum trading. In other words, going in the direction of a breakout. We know candlestick signals are great for reversals, telling us the trend is potentially going to turn. Or at least run out of steam. But you could use the idea that many candlestick signals, not all of them, but many of them could be used as support or resistance. And with that in mind, I'll show you how to use candles for momentum trading. So one of the things we look at with doji is we could use those doji as a resistance area. I've refined it a little bit, and as you can see here, we noted that we use the highest high, the market's rallying, and whatever the highest high is between the doji and the prior candle is a resistance area. So we see on this slide here that the highest high is obviously the white real body, so that becomes resistance. But notice I've extended the doji now with a gray line, so that has a higher high, so that becomes our resistance area. So as shown here on the left side, the implication is that a close over that area, in other words, the highest high, so in this case it would be over here, would be a bullish breakout. The Japanese would say the market's refreshed. And here's where we can consider a bull momentum trade. In other words, going in the direction of a breakout. In this case, an upside breakout. So let's look at how this works. So here we have a doji on the left. You see that became resistance. Now notice how the market got above the resistance area shown at the arrow. And once again, we don't show which market or the time frame because candles are universal. They work in all markets and all time frames, whether it's equities or options or forex or commodities or futures. So notice that the market got above the resistance area but didn't close above it, so the doji is still resistance. The market closed over the resistance. That's a bullish breakout. And now we can consider a momentum trade. In other words, trading with a breakout. We want to be long because the market has told us that the bulls have taken over. All right, and then we can start using Western indicators. So, for example, one of the things we could look at is this box range. You can see the blue line I just highlighted or had come into the slide on the bottom there. So that means the market was in the trading range between about 43.5 and 46.5. And one of the ways I like using price targets, I like box ranges, which this was, and essentially you take the height of the box and you add it to the breakout point. So that would be a minimum target. So you'd start, maybe you'd take some profits. So here would be a target right around the 49.5 area. So maybe you take some profits over here. Obviously the market rallied, but you have no way of knowing that. One of our more advanced topics actually is using trailing stops to let your profits ride. So with the correct use of trailing stops, maybe you'd take some profits over here, but you'd probably still be net long to ride this. And speaking of trailing stops and advanced tactics, I just wanted to briefly give you a heads up that keep an eye on your email inbox over the next few days for a special super early bird announcement on my only upcoming advanced candlestick seminar, which includes a lot of new strategies, and you could use these strategies, these advanced strategies, in any market you trade or invest in. So just keep an eye on your email box. So thanks for joining me, and may the candlesticks continue lighting your path to greater profits.